Money is everywhere, but it can be a real puzzle. Why do we spend, save, or invest the way we do? It's not just about numbers, it's about what's going on inside our heads. Our money habits are like our own personal stories, shaped by what we learned growing up, what we think is normal, and even our own personalities. So, what if we could understand the hidden reasons behind our money choices? Experts who study minds and money have sorted these personalities into different groups, each with its own special traits. These special money personalities show how we feel, what we believe, and what we do with our cash. Let's explore these money personalities and see what they reveal about us. First comes the savers. Savers are all about saving up. They love tracking every penny, finding deals, and stuffing their money away like a cozy blanket on a cold night. Feeling safe and ready for anything is their money goal. They aren't big risk takers. Safe savings are their happy place. Watching their money grow is like a little reward for them. It's not about being stingy, it's about being smart and planning for the future. They know that waiting for good things can be worth it, and they're happy to save now for a better tomorrow. But being a saver isn't just about counting pennies. They're also money detectives, always looking for ways to make their savings even bigger, like finding hidden deals or learning about smart investments. Next, we have the spenders. Spenders are the life of the party when it comes to money. Spending cash makes them happy. A fancy dinner, a cool gadget, or a weekend adventure, it's all about the fun and excitement. They love living in the moment and enjoying life to the fullest. But while they're great at having a good time, saving for the future might not be their favorite thing. Thinking about money tomorrow can be a buzzkill when there are so many cool things to buy today. This can sometimes lead to money troubles like debt. But don't worry, being a spender isn't all bad. What you need to do is find a happy balance between enjoying life now and planning for the future. If you closely understand your money personality, you can learn to spend smarter. Making a budget, saving a little, and finding ways to enjoy life without breaking the bank are all part of the plan. This personality is rather difficult. Avoiders are like money magicians. Poof, money disappears when they look at it. Talking about cash makes them feel overwhelmed or scared, so they pretend it's not there. It's not that they don't care about money, it's just easier to hide from it. But hiding from your money is like playing hide and seek with your future. Ignoring your finances can lead to big problems down the road. You might miss out on saving for fun things or building a safety net. Instead of enjoying life, you could end up stressed about money all the time. Risk takers are the adrenaline junkies of the money world. They love the rush of taking chances and chasing big rewards. Whether it's playing the stock market, starting a new business, or trying out crazy investments, they're always looking for the next exciting adventure. Their bold moves can lead to huge payoffs, but it's like a roller coaster. There are ups and downs. So, while it's fun to live on the edge, it's important for risk takers to wear their seatbelts. Careful planning and a little bit of caution can turn those thrills into spills. It's easy to get caught up in the excitement of big wins, but every roller coaster has ups and downs. Risk takers need to be prepared for those dips, or they could end up losing more than they can handle. It's like playing a game. You need a plan to win, but also a backup plan if things go wrong. Knowing you're a risk taker is the first step to using that energy for good. Take chances, but make sure they fit your life and your goals. Figuring out your money personality is like discovering a secret about yourself. It's about understanding how you think and feel about cash, how you spend it, and how you plan for the future. It's like looking in a mirror and seeing your money habits reflected back at you. Your money personality is shaped by your life story. Where you grew up, what you've been through, and the people around you all play a part. Once you understand your money style, you can start making changes. If you're a spender, try saving a little extra each month. If you're an avoider, start with small steps, like checking your bank account once a week. Whether you're a saver, spender, risk taker, or avoider, taking control of your finances is essential. Here are some easy steps to help you manage your money better. Believe it or not, your thoughts about money can make a huge difference in how much you have. Annalise Wealth, a money expert, says the first step to getting rich is believing you deserve it. It's like having a growth mindset. You think you can achieve anything, including financial success. To build this money mindset, start by noticing your money thoughts. Are they mostly positive or negative? Replace those money-blocking thoughts with hopeful ones. Imagine yourself having plenty of money and feeling secure. This might sound simple, but it's powerful. When you believe in abundance, you'll act with more confidence. You'll ask for that raise, negotiate better deals, and go for that dream job. Now, life happens, and unexpected expenses can pop up and ruin your plans. Financial expert Alex Hemmer says the key is to stay calm and create a plan. Talking to a trusted friend or family member can help you feel less alone. They might not solve your problem, but talking it out can make you feel better. Next, figure out how to pay the bill. Can you break it up into smaller payments? Remember, being good with money isn't about never having debt. It's about managing your money wisely, even when things get tough. Reaching our goals is easier when we set a realistic timeline to achieve them. The more specific you are about what you're trying to accomplish, the easier it will be to stick to your goals. As a first step, start by asking yourself if your timeline is realistic, given your current financial situation. If it's not, you can extend your timeline or look for ways to make more money, such as through a side hustle. Most importantly, one of the best ways to start saving is to set aside some money as an emergency fund for unexpected costs. You should aim to have at least $1,000 in your emergency fund, especially if you're just starting to save or still paying off debt. Emergency fund can alleviate money-related stress. First, it gives you the psychological safety to stay calm during stressful situations such as a mass layoff or a global recession. 2. In case you face a personal emergency, such as a vehicle repair or a last-minute surgery, you will have one less thing to worry about. Lastly, it will help you build the discipline to budget regularly and make you more aware of your financial situation. Now, when we save our money in a bank account, it's likely to lose value over time. The low interest rates that saving accounts offer can't keep pace with inflation. To deal with this, invest. Investing allows you to keep pace with cost of living increases created by inflation. At a maximum, the major benefit of a long-term investment strategy is the possibility of compounding interest, or growth earned on growth. How do you invest? Well, build a diverse range of investments to manage your money effectively. Some examples include stocks, bonds, private equity, venture capital, precious metals, commodities, and real estate. Diversification helps you manage risk by ensuring all your finances aren't tied up in a single entity. A well-constructed portfolio should include several different types of assets, meaning stocks, bonds, etc., that do not move in tandem. This reduces the volatility of a portfolio without necessarily lowering its return potential. So, start today. Explore your money personality, set realistic goals, and take action.